Hey everyone, and welcome to another deep dive. Today we're diving into a company you might not have heard of yet.
Mhm.
It's called New Holdings,
Yeah.
but they're really making waves in the financial world, especially with their work with New Bank.
Right.
And we're basing this deep dive on a recent Motley Fool article that caught our attention.
Yeah, it's a really interesting one.
Yeah, and what's really fascinating about New Holdings is they've seen this explosive growth. I mean, they've gone from having less than 1 million customers to nearly 100 million in under 10 years. It's wild.
It is. And all while, focusing on a region that a lot of investors, they kind of overlook, Latin America.
Yeah.
Right.
And that's a huge part of what makes them so intriguing.
It really is.
So the Motley Fool article, suggests that investing in New Holdings could be, well, it could be a way to triple your investment over the next decade. That's a pretty bold statement.
Yeah, it is. And, one of the things that makes New Holdings so interesting is they're really tapping into a market that, it's ripe for disruption. They're not going after, like, the usual suspects in the U.S. or Europe. They're laser focused on Latin America, a region, by the way, with just a ton of untapped potential.
Yeah. And they're not, just dipping their toes in the water. New Bank is, get this, it's the largest neobank in the entire Western world.
It's pretty remarkable. Yeah.
Now, for those of you who might be scratching their heads thinking, what in the world is a neobank?
Right.
Think of it as banking for the, for the digital age.
Yeah.
It's all online, no brick and mortar branches.
Right.
And that's a big deal, especially in Latin America, where traditional banking can be, it can be a real pain.
Right. It's where New Bank's story gets really interesting, actually, because they started in Brazil, a country that's, well, it's kind of infamous for its really complex banking system. The founders of New Bank, they actually experienced this frustration firsthand.
Oh, wow.
Dealing with the banking system there.
Oh, wow.
And that's actually what sparked the idea for New Bank. They wanted to make banking simpler.
Yeah.
More accessible, more user-friendly.
I see. So instead of wrestling with mountains of paperwork and waiting in endless lines at the bank, people can manage their entire financial lives like right through their smartphone.
Exactly. Yeah. Through New Bank's app.
Yep.
And it seems to be working because over half the adults in Brazil, they use a New Bank product.
Wow.
That's a pretty impressive market penetration, I'd say.
It is.
Really is.
But New Bank isn't, content with just conquering Brazil. They've already expanded their reach into Mexico and Colombia.
Yeah.
And they're boasting some pretty impressive numbers already. 8.9 million customers in Mexico.
Yeah.
And 2 million in Colombia. And those numbers, well, those are just the beginning, right?
Right.
Yeah. Sounds like they're on a roll, but their success goes beyond just banking. It's tied to something bigger.
Right.
Their growth, New Bank's growth, is intrinsically linked to the economic growth of the entire region of Latin America.
Yeah.
Now, I know some of you listening out there might be thinking, why should I care? Why should I care about the economies of countries that are so far away?
Right.
It's a fair question.
It is. But, those economies, those Latin American economies, they're really poised for, some significant growth in the coming years. And that growth, that could directly impact, well, it could directly benefit your investments.
Gotcha. Okay, so let's take Mexico, for example.
Right.
Their GDP, it's been steadily climbing, and they've been attracting a lot of businesses that are relocating their operations closer to North America.
Exactly.
Now, let's not forget Brazil. I mean, they're a major player in the region.
Huge player, yeah.
Their economy is, it's bouncing back after facing some rough patches.
It is, yeah. And even Argentina, which they've had their share of economic struggles. They're showing some really promising signs of recovery.
That's good to hear.
Yeah, a new pro-business president. And they successfully, got themselves out of hyperinflation. So things are looking up, for Argentina.
That's definitely good news. And it's not just about, individual countries either.
Yeah.
Latin America as a whole has this demographic advantage over a lot of other regions.
Yeah.
The population is younger, which usually means, more spending, more economic dynamism, and ultimately, well, more growth.
Exactly. It's the younger population is like, it's a powerful engine for economic growth, right? And for a company like New Bank, well, that's particularly important because they make money when people use their platform, when they spend, when they save, when they borrow. So a growing economy with, a young and active population, that's basically a recipe for a new bank's continued success.
Okay. Now, the Motley Fool article that we're basing this on, it makes this very bold claim.
Right.
They say new holding stock could actually triple in the next 10 years. Now, I got to admit, my initial reaction was a lot of skepticism.
Right.
Triple in a decade? Come on. But, when you actually dig into their reasoning, it starts to make a little more sense.
It does, yeah. And the prediction, it rests on two key pillars. The first is that New Holdings has the potential to reach, a staggering 200 million active customers. And they do this by, expanding further into Latin America.
Wait.
And remember, we're talking about a region that, it's projected to have a population of something like 700 million people by 2030. I mean, that's a massive, massive pool of potential customers.
A lot of people. Okay, so that's a ton of potential customers. But are they expected to spend enough to actually justify such a massive increase in the stock price?
Right. And that leads us to the second pillar of the prediction. The anticipated rise in spending per customer.
Okay.
The article points out that spending per active customer, it more than doubled between, December 2021 and December 2023. And as Latin American economies continue to grow, they're projecting that, that spending could double again over the next decade.
So double the customers, double the spending per customer. We're talking about a potential fourfold increase in revenue.
Yeah.
Okay, it's starting to sound a bit more plausible now, but that still doesn't, automatically translate into a tripling of the stock price, right?
Right, and that's where the concept of operating leverage comes in.
Okay.
Now I know that might sound like like a jargony financial term.
It does a little,
but it's really a pretty straightforward concept. Imagine you have a factory, right?
Okay.
The more you produce, the lower the cost of producing each item, right?
Right, because your fixed costs like rent, machinery, all that, it's spread out over more units.
Exactly. So New Holdings operates in a similar way.
So as they expand their customer base and their revenue increases, their operating costs, they don't necessarily rise at the same rate.
Right.
So this means their earnings could actually grow even faster than their revenue.
Exactly.
Okay. I'm starting to see how this could all add up to a pretty significant increase in stock value.
Right.
But the article doesn't just, mention operating leverage.
Yeah.
It actually suggests that it could lead to a fivefold increase in earnings.
Right. And that's where things get really, really interesting.
Yeah.
So, let's unpack the numbers and see how this, this potential fivefold increase in earnings could actually translate into that tripling of New Holdings' stock price over the next decade.
That sounds like a great place to pick up in part 2. See you soon.
Welcome back to our deep dive into New Holdings. Before we, jump back into those earnings projections,
right?
Let's take a step back and just ask ourselves, how does a potential tripling of New Holdings stock value, stack up against other investment options out there?
Yeah, that's a great point because,
Right.
no investment is a guaranteed slam dunk, right?
Right.
And it's crucial to consider, your own risk tolerance.
Exactly.
And what you're hoping to achieve with your investments.
Absolutely. So let's say you're thinking, okay, a triple sounds tempting.
Right.
But the stock market, it can be so volatile.
Right.
Wouldn't I be better off just, playing it safe and putting my money in a low yield savings account?
It's a valid thought, especially if you're risk averse.
Right.
But this is where, understanding the power of compounding returns.
Right.
And the difference between low risk, low reward versus, higher risk, higher reward investments.
Right.
Really becomes important.
It really does.
So let's imagine, you have $10,000 ready to invest.
Okay.
You could tuck it away in a savings account, earning a modest 2% interest annually.
Okay.
That's a very low risk approach.
It is.
But the returns are, they're pretty modest.
Yeah.
After 10 years,
right,
you'd have around $12,190. It's something, but not,
Right.
Not exactly a game changer.
Right. It's the slow and steady route.
Right, exactly. That's
Yeah.
the slow and steady.
Well, what happens if we take that same $10,000
Right.
and we put it into new holdings, you know,
Yeah.
assuming their stock does triple as predicted.
Right, right.
Well, in that scenario, you're $10,000.
Yeah.
It would balloon to $30,000 in 10 years. So that's a pretty significant difference.
It is.
But it's important to remember that, you know,
Right.
higher potential returns,
Yeah.
they always come with higher potential risks.
And that's the key takeaway here, right?
Exactly.
This isn't about blindly throwing money at a stock and hoping for the best.
They know.
Informed decision making is key.
Absolutely.
And that's why we're taking this deep dive.
Right, to give you the insights you need to make choices that align with your investment goals.
Right.
So to continue that journey, you know, let's kind of shift gears and delve into what that fivefold increase in earnings could actually, you know, could actually look like.
Yeah.
Remember, New Holdings currently has a net income of roughly $1.78 billion.
Okay.
A fivefold jump.
Yeah.
That would put their net income at a remarkable $8.9 billion in 10 years.
Now that's a figure that catches my attention.
Right.
But how do we get from a potential $8.9 billion in earnings to a tripling of their stock price?
Right. Well, that's where the price to earnings ratio or PE ratio enters the picture.
Okay.
It's basically a way to evaluate a company's, you know, stock price relative to its earnings per share.
Okay.
So a high PE ratio, you know, often signals that investors are optimistic about the company's, you know, future growth.
Okay.
While a lower PE ratio might suggest less confidence.
So is there like a Goldilocks PE ratio? You know, one that's just right.
There's no magic number.
Okay.
And it really depends on the, you know, the industry and the company's stage of growth.
Right.
But as a general rule, you know, a PE ratio that's below the market average could indicate that a stock is undervalued. Mm-hmm. While a PE ratio above the average might suggest it's overvalued.
Okay, the Motley Fool article, it also mentions the price to book ratio, or PB ratio.
Yeah, the PB ratio.
Can you break that down for us?
Yeah, it basically compares a company's, you know, market value to its book value, which is basically its net assets.
Gotcha.
It can give you a sense of whether a stock is trading at a premium or a discount relative to its underlying assets.
So if a company has a low PB ratio, does that mean it's a bargain?
That's the basic idea.
Okay.
But it's not quite that simple. It's always important to look at the bigger picture and compare these ratios to, you know, industry averages and historical trends. Right.
The article also highlights New Holdings, you know, impressive revenue growth in recent years.
Yeah.
And projects that this upward trajectory will continue. Why is revenue growth such a critical factor for investors?
Well, revenue growth is really a vital sign of a company's health and its ability to, you know, to expand its reach. It shows that they're, you know, they're attracting new customers, increasing sales, and ultimately, you know, generating more income.
So the faster the revenue growth, the better. Right.
Generally speaking, yes.
Okay.
But it's essential to consider the sustainability of that growth. Right. You know, is it driven by organic expansion, or is it fueled by, you know, acquisitions or one-time events? Right. Can the company, you know, realistically maintain that pace of growth over the long term?
Those are some great points to consider.
Yeah.
Speaking of sustainability, let's shift our focus to profitability. The article states that, you know, that New Holdings is currently profitable.
Right.
But what about their future profitability? Right. How can we assess that?
Well, profitability is another, you know, another crucial metric for investors. Yeah. It tells you how much a company is actually making after covering its expenses. Yeah. And it's not just about, you know, the raw amount of profit margins play a big role as well.
Profit margins, can you explain what those are?
Yeah, profit margins, they basically measure how how efficiently a company
Yeah.
converts its revenue into profit.
Okay.
So there are different types of profit margins, like gross profit margin, operating profit margin, net profit margin.
Right.
But they all essentially tell you,
Yeah.
how much profit the company generates for every dollar of revenue.
So higher profit margins generally indicate a more profitable and efficient business.
Exactly. And by looking at a company's profit margins over time,
Right.
you can get a feel for whether they're trending upwards or downwards.
Mm-hmm.
And this can offer some valuable insights into the company's operational efficiency and its ability to manage costs effectively.
Okay, we've covered a lot of ground here.
We have.
From the potential for growth in Latin America to the factors that could shape
Right.
New Holdings stock performance.
Yeah.
And we've also looked at key financial metrics
Right.
that investors should keep an eye on.
Yeah.
But let's circle back to something you mentioned earlier.
Okay.
The importance of doing your own research.
Right. I can't emphasize that enough.
Right.
This deep dive, it's just the starting point.
Right.
It's vital to dig deeper, to explore multiple sources.
Right.
Understand different perspectives and ultimately form your own conclusions.
And it's not just about,
Right.
crunching numbers and analyzing financial data.
Mm-hmm.
It's also about, grasping the company's business model,
Right.
understanding their competitive landscape,
Absolutely.
and getting a sense of their long-term vision.
Right. Ask yourself some key questions.
Yeah.
Do you believe in the company's mission?
Yeah.
Do they have a sustainable competitive advantage?
Right.
Are they addressing a real need in the market?
Those are excellent questions,
Right.
and answering those questions, thoughtfully is what leads to
Right.
to well-informed investment decisions.
Absolutely.
But before we wrap up, we need to address the elephant in the room,
Right.
the potential downsides,
Yeah.
the risks that could derail
Right.
New Holdings success story. After all, no investment is entirely risk-free.
Yeah.
And that's a conversation for part 3
Right.
of our deep dive.
Right.
See you there. Welcome back to our deep dive into New Holdings. We've talked about their remarkable growth, the promising economic landscape of Latin America, and we've even crunched some numbers to explore the possibility of their stock tripling in value.
Right.
But before you jump into any investment decisions,
Yeah.
we need to address the potential downsides,
Right.
the risks that could throw a wrench into New Holdings success story.
Absolutely no investment is completely risk-free.
Right.
And New Holdings, well, they face their own set of challenges.
Okay.
One of the most significant risks that they face is the the intensely competitive landscape of the fintech industry.
Yeah, we touched on this briefly before, but could you elaborate on the specific competitive threats that New Holdings might encounter?
Sure. I mean, think about it.
Yeah.
Traditional banks, they're not just sitting idly by.
Right.
They're scrambling to modernize and catch up with the
Right.
with the digital revolution.
Right.
And then you have these international fintech giants.
Right.
You have,
Yes.
companies with massive resources and global reach.
Yeah.
Who could easily decide to
Yeah.
to enter the Latin American market.
Right. And we can't forget about the smaller, more agile, fintech startups
Right.
that are popping up everywhere, focusing on these niche markets like lending or payments.
Exactly.
So how does New Holdings plan to stand out in this crowded playing field? What's their secret weapon?
Well, their first mover advantage is definitely a major asset. They've already established a strong brand presence,
Right.
and built a loyal customer base, in Brazil, Mexico, and Colombia.
Right.
They've also earned a reputation for providing a seamless and intuitive digital banking experience.
Right, which is crucial in today's digital first world.
It's absolutely essential.
But they're not just relying on being first, though, are they?
No, they're not.
The Motley Fool article mentions their use of technology to personalize their services.
Right. That's another key differentiator.
Okay.
New Holdings is leveraging, data and analytics to gain a deeper understanding of their customers' habits, the financial aspirations, their individual preferences.
Right.
And this allows them to tailor their products and services in a way that traditional banks, they often struggle to do.
Right. It's about offering a truly personalized banking experience.
Exactly.
That makes sense. It's like they're combining the convenience of digital banking with that personalized touch that customers crave.
Exactly.
Okay, so we've got the competitive landscape.
Right.
What other potential pitfalls should investors be aware of?
Well, the regulatory environment in Latin America is another factor to consider.
Oh, okay.
Financial regulations, they can be a bit of a patchwork across the region.
Right.
And any changes in these regulations, well, they could impact New Holdings operations and their profitability.
Could you give us a concrete example of what kind of regulatory changes could create these headwinds for New Holding?
Absolutely. Imagine governments decide to impose stricter capital requirements on fintech companies. This would mean that New Holdings would need to hold more reserves, which could potentially limit their lending activities and affect their bottom line.
Right.
Or they could introduce new data privacy regulations that make it more difficult for New Holdings to collect and analyze customer data.
Right, which is a cornerstone of their personalized approach.
Exactly. So regulatory uncertainty is a real risk.
Okay. Anything else we should add to our list of potential downsides?
Well, we can't forget about the broader macroeconomic context.
Right.
While the economic outlook for Latin America is generally optimistic, there are always external factors that could disrupt things.
Right.
Currency fluctuations, political instability in the region, or even a global economic slowdown.
Yep.
All of these things could impact consumer spending, borrowing, and saving habits, and that would have a direct effect on New Holdings business.
It sounds like there's a lot to keep in mind.
There is.
But I think it's important to remind our listeners that feeling a bit overwhelmed by all these factors is perfectly normal. Investing can be complex.
It can be.
And it's okay to feel like you're not a financial expert.
Exactly. And that's why diversification is so crucial in investing. It's all about, spreading your investments across different asset classes, industries, and geographical regions to mitigate those inherent risks.
Right. So we've explored both the potential rewards and the potential risks associated with New Holdings.
We have.
But what does it all what does it all mean for you?
Right.
How can you take this information and make smart decisions about your own investments?
Well, first and foremost, remember that this deep dive, this is not financial advice.
Right.
It's designed to be educational.
Exactly.
And to get you thinking critically about investment opportunities.
We're not here to tell you what to do with your money.
No.
Our goal is to provide you with a framework for thinking about the potential upsides and downsides
of a company like New Holdings.
Right. So if you're seriously considering investing in New Holdings or any company for that matter, here are a few key takeaways.
Okay.
First, do your homework.
Absolutely.
Don't rely on a single article or a single source of information.
Right.
Dig deeper.
Yeah.
Explore various perspectives and form your own opinions.
Form your own conclusions. Yeah.
Second, take a hard look at your own investment goals and risk tolerance.
Yeah. Are you seeking, quick gains, or are you playing the long game? How comfortable are you with the possibility of losing some of your investment?
Exactly. And finally, don't forget the bigger picture.
Right.
What's happening in the industry as a whole?
In the world around you?
Right.
What are the economic and political trends in the region?
Yeah.
How might these external forces influence the company's future prospects?
Those are all great points to consider.
Right.
Investing isn't, it isn't just about
Yeah.
picking stocks. It's about understanding
Right.
the wider context
Yeah.
and making well-informed choices based on your individual circumstances.
Well said. And remember, the process of learning and discovery,
Yeah.
it's just as valuable as the end result. So keep exploring, keep asking questions,
Yeah.
and keep challenging yourself to become a more knowledgeable and confident investor.
Yeah. And on that note, we'll wrap up our deep dive into new holdings.
Yeah.
We hope you've enjoyed the journey as much as we have.
Yeah. Thanks for joining us.
Until next time, keep diving deep.